to pop. Keeping up the pressure, yields rise as investors fully price in a 75 basis point ECB hike. The Fed's Loretta Mester says rates need to rise to above 4% from the Fed by early next year. Plus, Chengdu lockdown. China puts 21 million under new COVID measures, the biggest city to shut since Shanghai earlier this year. Welcome back to the programme. Half an hour into the European trading session, and this is what the picture looks like then. The Stoxx Europe 600 down by 1.2%. The DAX, the FTSE 100, both under pressure as well, down by 1.3% over in Germany. If we take a look at some of the sectors and the negativity that we have coming through in all sectors across the European equity market space today, you can see that the broad sentiment is very much risk off. And the story that seems to be dominating this actually is around China. So adding in a new reminder of the risks posed by China and the ongoing COVID policies there that result in periodic lockdowns. We're seeing that in Chengdu, 21 million people being put into those lockdown conditions. And that is having an impact on some of the European businesses that do well out of China or have done. That in particular is luxury goods. So consumer products and services is the worst performing sector here in Europe as a result. Basic resources also under pressure because we've seen some commodity prices dropping on lower global growth expectations, again, around that China story. Well, I was going to say the upside, but they're not going higher, are they? But least affected, we've got utilities and telecoms. Perhaps a little bit of relief in some of the utilities that have a UK focus around some of the comments from the leading contender to be UK Prime Minister, talking about not wanting windfall taxes on any further energy businesses. We'll get to that conversation a little bit later. Let's get a Bloomberg First Word News update. Here's Alice Atkins.
Hi, Anna. The Chinese metropolis of Chengdu has locked down its 21 million residents, forbidding them to leave their homes except in special circumstances. It's the biggest city to be locked down since Shanghai's bruising two-month crisis earlier this year, as China continues its COVID-0 battle. The country's vast western region, until now, has been largely untouched by the coronavirus. Liz Truss, the bookmaker's favourite to succeed Boris Johnson, has ruled out introducing any new taxes if she becomes the UK's next Prime Minister. At the final Conservative Party leadership hustings, Truss also said she would not introduce any new windfall taxes on the energy sector. The result of the election will be announced on Monday. A top UN official says China has committed serious human rights abuses against ethnic Muslims in the Xinjiang region and may be guilty of crimes against humanity. UN High Commissioner for Human Rights Michelle Bachelet cites testimony alleging patterns of torture as well as the demolition of holy sites. Beijing tried to block her report and says its actions in Xinjiang are aimed at clamping down on extremism and terrorism. Sarah Palin has lost a special congressional election in Alaska in a district that's been Republican-held for nearly 5 decades. Democrat Mary Peltola flipped the state's lone House seat, growing Democrats' majority in the narrowly divided U.S. chamber and setting up a rematch for the seat in November. Access to abortion was among the issues which saw Peltola narrowly beat the former Republican vice presidential candidate. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna?
Alice, thanks very much. Alice Atkins with your First Word News update. Now let's turn our attention to Europe's energy crisis, where governments are scrambling to secure gas supplies and replace unreliable Russian supplies. Germany is now reporting that its gas storage has risen to 84% of capacity. Let's talk to Claudia Kempfert, head of the Department of Energy, Transportation and Environment at the German Institute for Economic Research, DIW. Claudia, very nice to have you with us. What's your analysis of the state of storage and how that positions Germany going into the winter?
Yeah, well, the state of storage is that it's quite full because the German government did everything they could do to fill it and has, spent a lot of money to fill it, and now it's 84%. It's above the plan the German government had, and I think it will be on plan to fill it by 90%. By November. That's actually the plan, and we can make it, and that's a good signal because we need the storage as full as possible in order to keep over the winter. And in addition to this, also the diversification of the gas imports has been done, but on the other hand, we have to save more gas before winter.
Yes. What difference does that storage make, Claudia? Because, of course, having storage full into winter will be a real positive. But at the same time, it takes more than just what Germany can store to provide enough gas through the winter. So what kind of situation will Germany be in, even if storage is really strong?
Well, yeah, we are still in the situation that the Nord Stream 2 or Nord Stream 1 pipeline there's no gas transported right now through the pipeline. That's still the situation, but we do get gas from other countries, especially the diversification of imports has been done. We get more from Norway, from the Netherlands. We will get also floating terminals, liquefied gas terminals by winter. That helps us to come to increase the supply, in addition to what we might get also from Russia. But on the other hand, we have to do more to reduce the gas demand, because the industry, the economy in total has reduced already by 20% the gas demand. That's quite high because the gas prices are so high, and now we have to do more also to substitute gas in the electricity sector, but also to do more to reduce the gas demand in the building sector with the heating demand by winter.
Do you think, Claudia, is this something that is going to... You've talked there about how businesses or industry has been doing its part, and maybe this goes to the residential sector as well. Are individuals in Germany, are they doing enough? Are they feeling that they're under pressure to cut back? How are those messages being received?
Well, the messages are there also by the media. However, the steep gas price increases will come by winter. And right now, the steep gas price increases has been felt now by the industry, by the economy. This is why they reacted already and reduced the gas demand drastically. But on the other hand, the heating sector, the residential sector will react. We will get surely a very social debate because low-income households, poor households will be affected heavily. Right now, the government is debating about some kind of compensation, financial compensation measures to the most affected households, but also to companies. And this will continue. So yes, the households, the debate is there, but we have to do more, especially in the residential sector, to reduce the gas demand here more heavily.
OK, so there's still work to do there. What about talk of action being taken at European level, Claudia? We know a meeting's been called for a little bit later on this month, in a week or so, and we know there's talk of maybe putting some sort of cap on gas prices or trying to de-link gas and other energy products. What do you make of that conversation? Where should it go?
Well, I think it's quite dangerous to have a gas price cap, because what we need to do right now is to reduce the gas demand drastically. We have an electricity crisis in Europe, also because of the French nuclear reactors, which are not in place at the moment, and we have an energy and crisis as well, and we have to reduce gas drastically, not only in the electricity sector but overall. And if the gas price is capped, we have to subsidize drastically this price. On the other hand, we do not enough to reduce the gas demand, which brings us in a heavier gas crisis. So this is what we really need to do, is to have a higher gas price, although it's quite, affected by households, and we see the severe impacts out of it. But on the other hand, we need to do more to financially support and compensate most affected households and companies. But a gas price cap here is a wrong way. So this is hopefully what the German government will see is in that way, and also will also make the debates in Europe in that way. Yeah. So hopefully we will not have a gas price cap in Europe.
OK, that's interesting, because you could argue that maybe you should cap it at quite a high level. Then you would still get that price signal. You'd still get that high price weighing on demand, and you would not have such a large bill to pay by the government to sort of fund that cap. You wouldn't even support a cap at a high level then, Claudia?
No, I would not support that. I can understand the argument, and this is a debate we have in Germany as well. But I really fear that we will get a severe gas crisis simply because the gas demand is not reduced enough. Although, of course, there will be affected households. We have to do to compensate more, and also the compensation and the subsidies to pay this gas price cap are really huge. We should pay this money really for most affected households and companies, and not have a gas price cap, although, I mean, I understand the debates, but I would not support it.
So you would like something more targeted then, Claudia, more support for lower income households? Just leave it at that? Is that the way this should be dealt with in your view?
Yeah. Right. This is a way we should go to really targeted, to financially support targeted most affected households, but also companies. But leave the gas price, leave the gas market what they do, because the market is functioning. We have an energy crisis, we have a gas crisis. The supply is limited, and also in the electricity markets, the supply is limited, and the price increases are a result and a signal out of it. And we need to keep the market going. On the other end, help financially the most affected households, but also companies, and do more to compensate them, and not to cap prices, but to cap costs. That's really important.
Claudia, thanks very much for your thoughts. Good to speak to you. Claudia Kempfert, Head of the Department of Energy, Transportation and Environment at the German Institute for Economic Research, DIW. Coming up on the programme, we'll talk about energy from a different angle, oil, in fact, as it recoils. Crude prices have slumped more than 20% in the last quarter. More on the world's most important commodity next. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
The crypto area, I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to the European Market Open. We are at 8:44 here in London, 9:44 in Paris or Berlin. So we're 44 minutes into our European trading day and things look negative across European markets. Still reeling from the latest lines around China and COVID, but also still dealing with increasingly hawkish central bank policy and working that through into markets. Let me get to some breaking lines that are coming through from Brussels. The EU's Deputy Director General for Energy is speaking in Brussels, telling us a few things we already knew, like the EU is looking at energy price caps, which we did already know, but also saying that there are some other things that are going on. The EU is considering electricity demand reduction tools and also considering a windfall tax on energy companies. Now, we've had this at the nation-state level in some cases, but perhaps not at the EU level, so that'll be interesting to see. I know Italy and Spain already have taxes in place in that vein, but we'll see how that one develops as we work towards that meeting on September the 9th. Now, sticking with commodities, oil is lower this morning as September trading gets underway. Demand concerns have escalated as China, the world's top importer of oil, locked down Chengdu on a flare-up of COVID cases. The volatile macro environment has investors shunning risk assets, including then commodities, pushing the greenback higher. So the dollar is higher and commodities are weaker this morning. Joining us for more is Bloomberg's European oil editor, James Heron. James, very nice to have you with us. So oil has been sliding. It's actually been sliding for a few months now, give or take a bit of volatility within that. Does the slide in oil prices look set to continue?
There's certainly the bearish forces, the demand concerns don't look to ease anytime soon. One of the reasons that prices were more buoyant during the summer was that people thought that China had COVID finally behind it. This latest flare-up shows that's not the case. And the anticipation of stronger demand from China was seen as offsetting the economic weakness in the Western economies. And so again, if you can't rely on sort of Chinese growth to offset that, then yeah, the demand picture looks quite weak for a few months to come, certainly.
Okay, right. We'll see what happens with China and its COVID policy into November and those important meetings taking place there. What about OPEC Plus and the way it responds then to this current demand picture? Because we've heard from the Saudi Arabians that there was the possibility of cutting back production, even though President Biden went all the way to Saudi to ask them to boost production. We've got an important meeting coming on Monday.
Yeah, and the comments from the Saudis really show how the calculus in the oil market has changed. For months and months and months, the pressure was all like, OPEC, we need more oil, the market's very tight. And suddenly, they've gone from increasing every month to thinking about cutting back. Now, whether we see that on Monday, it remains to be seen. That would be a very sharp U-turn for them. And the other thing that's going on is the negotiations between the West and Iran continue. The possibility that more production could come from Iran is still very uncertain at this stage. So they may wait and see what happens, at least for the next meeting.
OK. And what about the outlook for oil supply for the rest of the year? You've mentioned Iran. That's a bit of a wild card, perhaps. I was reading about questions around Libya. For a period, people had questions around Iraq, although maybe that's gone away. What does the supply story look like?
Yeah, well, the Iran deal, we'll see things are happening again there, but we've been in this position before where we anticipated a deal and it never happened. Iraq, too, there's a lot of political turbulence there suddenly. And of course, the big thing that we know is going to happen is by the end of the year, Europe is going to ban most purchases of Russian oil. Russia has managed to adapt so far to other sanctions on its oil production, oil exports since the invasion of Ukraine. Whether or not it can do that again at a much bigger scale with the amount of oil that Europe will no longer be taking for it. So again, there's a question of like, there could be a big supply disruption, but maybe it could be smaller than people perhaps anticipate.
Yeah, on that front, I mean, does it just mean that different people buy Russian oil and the people who are not buying Russian oil buy other oil? Are we just sort of shuffling the oil pack, if you like, rather than cutting back on production, this EU rule change that comes in?
Eventually, yes, but there's always a period of adaptation where supply chains and shipping take a while to adjust, so you may see a drop in Russian production and then a rebound. That's exactly what we saw when the initial round of sanctions came on in February, where it dropped quite low, and by the midsummer it was almost back to pre-invasion levels. So we may see a similar trend again.
OK, James, thanks very much for your thoughts this morning. Bloomberg's European oil editor with the latest on oil dynamics, James Heron. Coming up on this programme, we'll talk UK politics. Liz Truss rules out introducing new taxes on energy or energy rationing if she becomes Prime Minister, as she makes her final pitch for the UK's top job. We'll find out on Monday who's got that top job. We'll get you analysis next. This is Bloomberg.
Monday, the UK Conservative Party decides who will succeed Boris Johnson as Prime Minister. As Rishi Sunak and Liz Truss go head-to-head, keep it tuned to Bloomberg for the latest news and up-to-the-minute results. Bloomberg, your global business authority.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife. Come here, let me show y'all something.
Welcome back to the Open. 8 minutes to 9 here in London. So just under an hour into the European trading day, and you can see European equity markets under pressure. Really the story out of China taking the edge off the European trading day. That lockdown of 21 million people certainly having an impact, and for an indefinite period. So we'll keep an eye on the headlines out of China on that front. Let's take a look at some of the things that we are watching out for today. At 10 a.m. UK time, we will have the latest Italian GDP figures, so building a picture of performance across the Eurozone. Also at 10 a.m, we will have Euro area unemployment numbers. Then at 1:30 p.m, we will have some data from the United States, including initial jobless claims. It's been a real week of focus on jobs, whether that's the JOLTS data or the ADP number. We are going to get the data I just mentioned today, and then, of course, non-farm payrolls tomorrow. And later, we will have results from the US chip manufacturer Broadcom. Really interesting in the context of what NVIDIA said about its ability to export certain AI chips to China. Let us focus in on the UK, though, now. And Liz Truss has promised not to introduce any new taxes on or energy rationing this winter if she becomes Britain's next Prime Minister. That's still uncertain, of course. She's currently Foreign Secretary. She's made the commitments during the final Conservative Party leadership hustings last night in London. We will know the winner of the contest on Monday. Joining us now with analysis, Bloomberg's Ben Sills. So, Ben, what is Liz Truss's plan to tackle the energy crisis? Do we have any detail above and beyond saying, you know, we can do something?
Well, we're starting to get a few little nuggets of information. Our team on the ground in Westminster yesterday had a couple of quite important scoops. We know that she's considering cutting business rates for small companies who have been particularly hard hit by the rise in energy costs. And we also know that she's planning a raid on some of the renewable energy producers who've had a bit of a windfall from the surge in power prices. So we're starting to get a slightly clearer picture.
Okay, and how viable is that? It's interesting you mentioned that raid on renewable energy because she's sort of ruling out more taxes, but there are other ways, I suppose, that they claw back that money. So, but how viable is the plan more broadly?
Exactly. I mean, I think there are a lot of concerns about it. I think that the fundamental problem is the talk of tax cuts at this stage of the game, with the UK likely heading towards recession, and the Bank of England hiking rates. It has investors very worried. Pound fell 5% during August. That's its worst decline since the aftermath of the Brexit referendum in 2016. And blue chip British companies are now paying more than 5% to borrow in the market. So that's a real sign of market tensions building, and that's before she's even got through the door at number 10.
Yeah, we spoke to Charlie Bean, who used to be at the Bank of England, of course, and at the OBR, and now at the London School of Economics, and he was talking yesterday about a risk premium now in gilt markets, so in UK sovereign debt. So I guess that takes me to my next question, which is what are the risks of this approach?
Well, I think what the fundamental problem is that the UK budget deficit, the public finances could start to spiral. Government borrowing demands would increase, and that would just place a lot of strain on the sterling markets, which have already been in trouble. Kind of beyond that, on a political level, we can see that there are massive tensions in the Tory party. There is not a consensus within the parliamentary party behind what Truss wants to do, and we've also seen quite strong indications that the Treasury officials who are kind of in charge of steering the ship, beyond the political cycle, are going to be trying to maneuver her into hiking taxes on the energy companies in order to shore up the public finances. So political tensions as well as market tensions. It's going to be a rocky ride, I think, for the new Prime Minister.
Yeah, it's going to be an interesting one then. Tax, not tax on energy companies. We already have it on oil and gas, of course. There'd been talk about extending it to various other power generating companies. Can they get money from them without calling it a tax rise? Let's see. Ben Sills, thank you very much. Bloomberg's Ben Sills with analysis. As we head towards getting the results of that Tory leadership contest, we will know by Monday afternoon, who is leader of the Conservative Party and who is the new UK Prime Minister. That is it for the European market open. Let's have a quick look at where we are on markets. The European equity picture looks pretty weak this morning. We're really weighed down by what's coming through from China. So a lockdown in Chengdu and the importance of that part of the Chinese economy to certain Western businesses having an impact. We're certainly seeing some luxury goods companies, some basic materials companies being affected by the latest lines on COVID out of China. You see stocks here at 600 down by 1.1%. Surveillance Early Edition is up next. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
VK ฟิล์มติดอาคารเกรด A กันร้อนสูงราคาถูกเริ่มต้นเพียงฟุตละ50 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
A problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
It will be necessary to move the Fed funds rate up to somewhat above 4% by early next year and hold it there.
As a policymaker, our number one priority has to be to restore price stability.
I do not anticipate the Fed cutting the Fed funds rate target next year.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. Perilous predictions. The S&P drops nearly 18% on the year. The famed investor Jeremy Grantham says the super bubble he's been warning about is still yet to pop. Keeping up the pressure, yields rise as investors fully price in a 75 basis point from the ECB. The Fed's Loretta Mester says rates need to rise above 4% by early next year. Plus, Chengdu lockdowns. China puts 21 million under new COVID measures, the biggest city to shut since Shanghai earlier this year. Well, it's a gloomy day, and we are getting Euro area manufacturing data coming in basically in line, if not slightly weaker. 49.6 is where it's coming in. The preliminary figure was 49.7, so not too much change there, but it is a gloomy day, overall dominated by some of the negative stories coming out of China, be it a new lockdown, be it also concerns on chip makers. NVIDIA warning on their profit, given some of the U.S. regulations on selling artificial intelligence to China. So that means overall, we have a down day so far, about an hour into cash trading, down more than 1% for the Euro Stock 600. Yields basically unchanged, with that two-year yield still at a punchy level right below 3.5%. So we are looking at, not even a rise of 1 basis point. But even so, that lift higher in the front end of the curve has been enough to lift the dollar and make that rate differential, say, with Japan become even more painful. That's why we're seeing the yen continue to fall. We're getting ever closer to that 140 level versus the dollar. It says it's up now because, of course, dollar at the front of this pair. 139.3 is where we stand. That's a rise of about 0.25%. You also have the Bloomberg dollar again. It's overall a strong dollar story, continues to be the only haven we can look for. So turning to Europe, you won't find many havens in this equity market. It is a painful day, red basically anywhere. Honestly, I'm hard pressed to find anywhere in Europe that isn't deeply in the red or selling off more than 1%. UK down 1%, CAC 40 down more than 1%. The DAX and the FTSE MIB, all of them under pressure today. So it looks, at least so far, like we're headed for another day of losses. So that's the public story, but what about the private story? Coming up later in the show, we're going to be speaking to Brookfield, which is seeking to ramp up its exposure in Europe. We're going to talk equities. We're going to talk tech investing in private equity and much more with Managing Director Anuj Ranjan. That will be about 9:30 a.m. London time. Now, traders, they are confronting the prospect of even bigger rate increases from the ECB. Hikes of 125 basis points by October are being priced in, with at least 175 basis point hike now fully baked in. At the same time, the Fed's Loretta Mester and Lori Logan have reiterated their determination to get inflation under control.
My current view is that it will be necessary to move the Fed funds rate up to somewhat above 4% by early next year and hold it there. I do not anticipate the Fed cutting the Fed funds rate target next year.
Hearing from central bankers and academics around the world, the clear priority was bringing inflation down. And that really lines up with my own priority, being president of the Dallas Fed and as a policymaker. Our number one priority has to be to restore price stability.
Well, we've got the all-star team out for you to discuss. We have John Bilton, head of global multi-asset strategy at JP Morgan Asset Management, and Christine Aquino from our markets team. Christine, fresh off your New York trip, so it only feels right to talk to you about U.S. assets. Look, we continue to see this pressure in yields having this big impact, be it the yen, be it equities. We're starting off fresh with the month of September. I mean, at what point do we call time? At what point do we say we're willing to buy the dip?
Well, Danny, that was the narrative over the summer, right? But clearly it has proven very temporary because, again, we're revisiting kind of the fears that we had at the start of the summer, which is essentially that the Fed and other major central banks are really going to be embarking on this massive tightening cycle and will be prioritizing inflation despite all the growth warnings, the recession warnings that we've been given. And, over the summer, that narrative kind of faded, particularly when I was in New York, there was definitely this narrative of peak inflation. Maybe things aren't so bad, but again, we get a fresh reminder from the Fed speakers that we've seen this week, from the ECB pricing that we've seen this week. 75 basis points is probably the new game in town that we're looking for now.
I gotta say, John, it feels like a lot of people have that same feeling that Christine's laying out at the moment. This idea that markets still need to reprice. Jeremy Grantham says that, the super bubble hasn't popped yet. Mike Wilson, yes, he's a perma bear, but keeps saying that we need to go lower. Do we need to retest those June lows? Does that make sense to you?
I think it does, because I think a couple of things have happened. First and foremost, the earnings revision cycle is only really just gotten underway. Historically, you have to be half to two-thirds of the way through that downgrade cycle before stocks find a base. And then this whole sort of summer exuberance, it felt a little bit like the Mamma Mia sort of dancing scene with markets just thinking, this is getting better. And then it's suddenly come down to earth with a bump following the Jackson Hole speech. And we've remembered that the Fed have a job to keep inflation under control. And with employment looking good in the States, they can be laser focused on inflation. And of course, what that means, all of a sudden, the valuation support, even in the face of weaker earnings, suddenly isn't there anymore. So yes, I'm sorry to say, I do think that we've got a little bit more of a torrid autumn ahead of us with regard to stocks.
And now I have ABBA stuck in my head, so thank you for that, John. I mean, look, Christina, I think it is interesting kind of what John's talking about, this idea that it's the Fed coupled with earnings. It's the margin compression at the same time that easy money is gone. Where do we stand on analyst revisions for earnings, what expectations are? I mean, do they have the bad news priced in?
I would tend to agree with John. I think sentiment really, when it comes to earnings expectations, still has to quite a way to go down. And that's probably the most difficult aspect of equity sentiment overall. That's the hardest to change, right? Because you will have the eternal optimist, particularly in the equity markets. Again, trying to push that narrative and believing that maybe, just maybe, there's a way that the Fed can achieve this soft landing without us plunging into a recession. Or even if we do get a recession, it'll be short and shallow. We've definitely heard that phrase a lot of times from the optimists in the market. But again, the reality is that those expectations when it comes to earnings growth moving forward really haven't budged all that much, despite the bad news that we've seen throughout the year so far. And so I think that's where that pressure will come from this autumn. And, once we get that sentiment clean out by the end of the year, perhaps that's when we can start seeing a little bit more green shoots heading into 2023.
Yeah, the sentiment cleanup, I feel like we've had so many head fakes with that one. I mean, especially, I got to turn to Europe, because if we're talking gloom and doom, it feels, John, that like Europe is the center of it right now. European stocks, they've obviously have been under a lot of pressure. Are you tempted at all by valuations, or is this just a region you don't want to touch?
Oh, my goodness. Yes, of course I'm tempted by valuations. And look, Europe, this is not the same Europe that we were dealing with back in the 2010s. This is a Europe with a solid banking sector, decent regulatory reforms that have gone through, decent household balance sheets and good corporations, and it's a very much more balanced market than it was sectorally. The thing is, it's cheap, earnings actually have got some operating leverage to them if and when Europe does get through the probable recession that's ahead of it. But most importantly, there's just too much hair on this at the moment. There's just a little bit too much in way of event risk, whether it's from energy, whether it's from policy, etc. And I think until that clears, it's cheap for a reason. But I would push back on those who think that Europe is that kind of structural underweight. I do believe Europe will be one of the winners when we get to the next cycle. But we've just got to have some patience here and now.
Yeah, still a lot of unknowns. And I'm seeing now von der Leyen saying that they're going to outline their power plan on a September 14th speech. So even that we still have to wait a little bit more. And Christine, this seems to be one of the prevailing factors in terms of the concern about Europe is what's going to be the energy story. Until then, what happens to these energy-intensive industries, ones that are looking at demand rationing going forward?
Well, Danny, I think we can expect a pressure moving forward, particularly as we head into the winter time. I mean, really, this growing energy crisis has been a bit of a specter over most European assets, whether it's in equities or the euro. And there is very good reason as to why the euro at the moment is still hovering around that parity level, despite the fact that we've had this massive repricing in ECB rate hike expectations, because that in itself you would think that would be negative or positive for the currency, but because there's this big counterweight of the energy crisis, a lot of uncertainty still there. We don't really know, what's the plan heading into the winter still, and that's definitely weighing on sentiment on European assets in general.
That mechanism of higher yields lifting the currency is just not happening in this environment. Christine, thank you so much for joining. As always, that's Christine Aquino. And John, you're not getting a break. Stick around. We're keeping you. John Bilton, head of global multi-asset strategy at JP Morgan Asset Management. Now, coming up, China puts 21 million people under new COVID measures in the mega city of Chengdu. We're going to get the latest next. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
20th.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our targets.
Spare capacity is becoming scarce. We are running on thin ice.
No one deliberately wants to go into battle, but we sleepwalk into conflict.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. China will impose its biggest COVID lockdown since Shanghai, starting from 6 p.m. local time today, with the measures in place indefinitely. Chengdu's 21 million residents will need a negative test to leave the city, and families will be allowed to send only one person out once per day for groceries. Joining us now is Bloomberg's China health reporter Linda Liu. Linda, it's already a very challenging summer being faced by residents and businesses in Chengdu, which of course is the capital of the Sichuan province. How does this add to those headaches?
Yes, Chengdu residents have been facing a very tough time recently because China is experiencing its worst drought in history. So Chengdu has, as well as other parts of the Sichuan province, have been experiencing rolling power cuts. People haven't had air conditioning to cool them down, so it's making conditions quite tough, as well as for businesses. The rolling power cuts have been impacting production there. So now that you have a COVID lockdown on top of that, the energy supply use with everybody at home is going to go up. So that's going to be a question for how people are going to manage with that. And Chengdu will also be undergoing a mass testing campaign in the next 3 days. With the heat that is going on outside, people will have to queue for hours in the sun. So it's going to be quite a tough challenge for the residents there.
And of course, we have the Party Congress coming in October. How does continued COVID flare-ups change the political calculus?
So the Communist Party has always maintained that the COVID zero policy, which is, employing snap lockdowns, quarantining confirmed cases, as well as close contacts to cut off transmissions. These have had success in stamping out infections, but they are getting more and more costly as you have more contagious variants of the coronavirus breaching defenses in China. So we've seen Shanghai went through a really grueling 2 months lockdown in spring. So there was a lot of suffering there. So there's a big swell of criticism against COVID zero, and the hope is from a lot of businesses as well as the public that the upcoming Party Congress could be a meeting in which China's leadership could take some of these feedback into account and change the direction of how the country is going to manage COVID going forward. But that's all speculation, as President Xi Jinping has firmly committed to the COVID zero policy for political as well as health reasons.
Okay, Linda, thank you very much. That's Bloomberg's Linda Liu in Hong Kong, keeping us up to date. John Bilton, head of global multi-asset strategy at JP Morgan Asset Management, is still with us. And John, when we're talking about attractive valuations, things that have sold off a lot, it's hard not to put China in that conversation. Now, previously it had been, okay, perhaps there'll be some lifting of COVID measures, and that's this big catalyst to buy. I mean, it seems like we're really far from that.
Yeah, I mean, I think that if you look back at the beginning of the summer, China had a pretty aggressive snap upwards because, and a lot of that was technically led, as you rightly say, earnings expectations on their knees, valuations inexpensive, and positioning washed out. So a little bit of good news went an awfully long way. What we didn't get was follow through, because remember, China is, the counter to the US and Europe, where it doesn't have the inflation issues that we're facing in these regions. It has capacity to stimulate, yet the stimulus that we got, the commitment to growth targets, which had been laid out at the beginning of the year, was notable by its absence. And when that comes through, you've kind of got to assume, well, look, China's inexpensive at the moment. Earnings expectations are pretty low, but it may well be a 2023 story before you can start to see some healing around the COVID policies and some more stimulus coming through. So again, as your reporter rightly pointed out, the Party Congress is incredibly important. So it's one of those ones you don't want to get caught short in for certain, but I still feel that we've got a little bit of uncertainty to work through, particularly with regard to stimulus.
And John, also shame on me, because I do feel like I've been framing the conversation a bit in terms of equity, but you prefer credit to equity. Walk me through why.
Yeah, well, we do. Broadly speaking, look, risk assets in general general, when you get weakening growth, are going to go down together. But there's a lot more support for the balance sheet today than there is for the income statement. We're seeing earnings getting cut, we're seeing margins under pressure, costs going up for corporations, households, the like. But bear in mind, through COVID, there was a lot of terming out of borrowing. Balance sheets are in good shape. We've already had a lot of default cycles in energy, and energy is not the problem this time around. And actually, if we look at where we stand today, the normal pattern that would apply to credit over a recession may well not hold this time. So sure, credit spreads could widen if we get weakness in the stock market, but we would argue that it's likely to be more contained, and actually that's where the bargains may be able to be found. As we start to get some confidence coming back in, as we get a more sensible pricing of the outlook, that could be the first place to be starting to look to get back into risk.
I do think that energy portion of it is really fascinating, and just how different this cycle is. 100%. Does that also mean we just kind of skip the default part of this cycle then?
Well, look, I mean, you know, as capital gets harder to come by, you know, there's always going to be those who are starved of capital and, you know, end up in a default situation. But bear in mind, we went through a period of weakness through COVID, which cleaned out some of the weaker firms, and the big clean out that happened back in 2015, the weakness in the commodity markets then also meant that you've got much safer balance sheets. You've got higher credit quality across the high yield segment. US high yield is more than 50% double Bs today. So the reality is we're looking at a very different index. So historical comparisons, while always incredibly important, need to be adjusted for that sector and that ratings mix.
And I just got to squeeze this in. We don't have too much time here, John, but if you are favoring investment grade over high yield, does there first need to be more pricing in of rate risk as we look, you know, Mester yesterday, for example, saying we got to go to 4%, maybe beyond, we're not going to cut our target?
I mean, I think we've seen the price action in the belly of the US curve, and once you get up towards that 3/4, 3.5 kind of level, it seems to run out of steam. Because at that particular point, the attractiveness of actually starting to hedge out liability streams brings a whole block of buyers back in to both higher grade credit and also to duration. So remember, it's not just about the rate outlook, it's about what people do with those instruments, and not everybody is looking for a price return. Some are looking for cash flow management, and at 3.5%, it's very, very attractive relative to where it's been over the last 10 years.
All right, John, afraid we're just out of time. Really great to get your thoughts this morning.
Thank you.
Thanks for joining us. John Bilton there, Head of Global Multi-Asset Strategy at JP Morgan Asset Management. Now, coming up later in the show, Brookfield seeks to ramp up its exposure in Europe. We're going to talk private equity and much more with Managing Director Anuj Ranjan. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, a Bloomberg scoop with Russia mulling buying as much as $70 billion of friendly currencies. That includes the yuan. Now, eventually, they would shift to a longer-term strategy, according to people familiar, to sell its holdings of the Chinese currency. That would be to fund investment. Now, this plan, again, seen by Bloomberg, won initial support at a meeting. And let me just read to you a quick line from this presentation. They have on it that the frozen $300 billion were of no help to Russia. On the contrary, they became a vulnerability and a symbol of missed opportunities. Let's get to our other top news now with the Bloomberg First Word is Leanne Gerrans. Leanne.
Good morning, Danny. Liz Truss, the bookmakers' favourite to succeed Boris Johnson, has ruled out introducing any new taxes if she becomes the UK's next Prime Minister. At the final Conservative Party leadership hustings, Truss also said she would not introduce any new windfall taxes on the energy sector. The results of that election will be announced on Monday. Now, a top UN official says China has committed serious human rights abuses against ethnic Muslims in the Xinjiang region and may be guilty of crimes against humanity. The UN High Commissioner for Human Rights, Michelle Bachelet, cites testimonies alleging patterns of torture as well as the demolition of holy sites. Beijing tried to block her report and says its actions in the region are aimed at clamping down on both extremism and terrorism. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thanks so much. Coming up, we're going to be speaking to Brookfield as they ramp up their exposure to Europe. We talk private equity next. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Deep into learning about blockchain and all of the new businesses. You know, I would characterize this as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Ferro. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Perilous predictions. The S&P drops nearly 18% on the year. The famed investor Jeremy Grantham says the super bubble he's warning about has yet to pop. Keeping up the pressure, yields rise as investors fully price in a 75 basis point hike from the ECB. The Fed's Loretta Mester says rates need to rise above 4% by early next year. Plus, Chengdu lockdowns. China puts 21 million people under new COVID measures, the biggest city to shut since Shanghai earlier this year. Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now let's turn to the world of private capital, and Brookfield is seeking to ramp up its exposure in Europe. The Canadian investment firm plans to open an office in Germany as it looks to tap deal opportunities in Europe's powerhouse. Well, I'm pleased to say we're now joined by Anuj Ranjan, managing partner at Brookfield. Anuj, thanks so much for joining us. And I feel like you sort of encapsulate this push for Europe since you are based here in London. I wonder, as you look to move more into Europe, open offices, make more investments, how does the prospect of a downturn in the nations, in the continent, color those decisions?
Look, thank you for having me, Danny. And there could not be a better time to be a value investor. There are many headwinds, as you just described. The market can in many ways not look pretty, but in fact, for a group like us, who's a long-term investor, prioritizes investing in cash flow generative assets and businesses, this environment actually limits competition and creates a ton of opportunity. I mean, we're now sitting on over $110 billion of cash and available capital. It's the most we've ever had in our history. And I think now is a very opportune time to have that kind of dry powder available for a market like Europe, where some of these things are more challenging.
Are people willing to sell right now? Because I ask that because I especially think of other private equity funds who maybe are looking at the prospect of selling at a pretty depressed multiple compared to what they bought at. Who is selling, and are the deals plentiful, even if you want them?
Well, Europe does slow down in August, so it's been not as active as it used to be. But, you know, we in the last 18 months have put $30 billion to work. We did an acquisition very recently in Deutsche Telekom's tower units in Germany. And prior to that, we bought a company called Modulaire, pan-European leader in modular leasing services for $5 billion. So we're putting capital to work. We're finding opportunities. Yes, there are those who aren't feeling any pressure to sell, probably aren't. If you can hold on to an asset, if you have a long-term view, you probably would hold. But
is that what we're seeing, private equity holding for longer?
I would say in most cases, private equity sponsors that do not have an issue in the debt markets would hold for longer.
Well, what are the ramifications of that? of companies being private for longer?
You know, if you've bought a business, as we often do, prioritizing the cash flows, and you underwrote situations like this, you took a long-term view, you're fine holding businesses for longer because they're generating cash. In situations where a business is not generating as much cash, you're not able to pull out that dividend or that yield, you might be in more of a challenging situation.
And in terms of sort of your sector mix, when folks think about Brookfield, they probably think about, you know, industrials. They, of course, think about the infrastructure segment of Brookfield as well. Do you need to shift away from that if you are looking at especially, you know, capital-intensive energy industries that need to use a lot of energy when it's really expensive right now, that prospect being a difficult one in this environment?
So we have been investing in new sectors. Technology is one where we've made a large investment, many large investments, been growing fairly significantly. But the type of technology we invest in is what I like to call industrial technology. This is cash flow generative, mature, profitable businesses that provide essential products and services that are hard to be replaced or replicated. You know, it doesn't matter what new shiny toy comes out, no one's replacing their Bloomberg terminals. In the same way, we like to invest in businesses that are very sticky, even if they are tech. So they have the same characteristics as an industrial or an infrastructure company. And we recently acquired a company called CDK in the US, $8.3 billion. This company has 70% market share of large US auto dealerships. And so it's not going away, nothing's changing.
Do they trade like tech or industrials though?
And that's the great thing, is that the NASDAQ being down 25% this year, it has brought some of the great tech names down with it. And that was a public to private where we thought it was a pretty great opportunity. I think in time we'll look back and see it was maybe one of our best investments.
Well, this goes back to this idea of, you know, are private investors selling? Are we going to look back on 2022 as, you know, the year of take privates, where that's where the most ample opportunity is?
I think we could. In 2008 and 2009, many firms like ourselves and many others actually made some of their best investments. These cycles, again, if you take a long-term view, as long as you underwrite and you plan for the bumps in the road that we have ahead, this would be a great time to, public markets are not valuing businesses the way the private markets are. Sometimes they're valuing them better, and at that time you see a lot of IPOs. Today, I think private sponsors should be doing more public to privates.
So when you are having the conversations with your portfolio companies, again, I go back especially to this idea, maybe not the tech ones, but ones that are having to deal with high inflation, with energy costs. When you're looking at a scenario of, let's say, demand rationing in areas like Germany, which you're pushing more into, what do those conversations look like? What does the playbook look like for the emergency scenario?
So in this case, you know, we've always followed a mantra of investing in businesses where we underwrote a downturn from the beginning. For 12 years, maybe that hasn't always happened, but what it did mean was we bought businesses that were resilient, high quality, and generated cash. And as Howard Marks once said, always never forget the 6-foot man who died crossing the stream that was on average 5 feet deep. We like to plan ahead for these environments, and so our businesses that we own today, our portfolio is quite resilient. That same approach, if we apply it as a long-term investor, if we just look at the long-term cash flows, this next 6 to 12 months, as difficult as it might be, will not make a huge impact on the total value of the business over time.
Does that mean you need to pull those levers, like cutting costs, rising prices, passing prices along? Is that happening more now?
Great businesses that are mission critical and provide an essential product or service can pass on those price increases. We are seeing that happen in many cases. In many cases, we actually are we always implement an operational improvement plan. It's where we think we get the majority of our returns. It's always been our thesis, our fundamental underwriting thesis, even in technology. And it's where we continue to see opportunity today.
So I got to press you just finally on one thing your CEO said in the earnings call last. He talked about, you know, private equity being among the most difficult to fundraise with in private capital right now. When you're having conversations with LPs, with investors, kind of what are their biggest fears right now? What do you need to calm them of and assuage them of in this current environment?
Look, they want to see cash flow. And I think buying businesses that generate a lot of cash, that are highly cash generative and withstand the test of time is very important. Thankfully, that's an area we spend a lot of time in, and I think they're consolidating amongst a few managers who have the capability, have a global setup, have a deep operational capability to deliver these returns.
All right, Anuj, I'm afraid that's all we have time for. Thank you so much.
Thank you very
for
much.
joining us. Great to have you on the program.
Great to be here.
Anuj Ranjan there, Managing Director at Brookfield. Let's get now to your Bloomberg Business Flash. With that is Leanne Gerrans. Good morning, Leanne.
Hi, Danny. Nvidia shares fell in late trading after it warned that new rules governing the export of artificial intelligence chips to China may affect hundreds of millions of dollars in revenue. The stock dropped on the disclosure that the chip maker's A100 and forthcoming H100 products will require approval from the US government before they can be sold to Chinese customers. Now, Australia's home prices saw their largest monthly drop in almost 4 decades in August. CoreLogic reports that prices in Sydney, the country's largest market, slid 2.3%, with Melbourne dropping 1.2%. The national index registered its biggest decline since 1983, with rising interest rates expected to drive further falls both this year and next. The Italian government's plans to sell the airline that emerged from the ashes of the troubled former flag carrier Alitalia may be dead on arrival. That's after Giorgia Meloni, the leader of the right-wing bloc that's expected to win the upcoming election, said she's opposed to selling state-owned ITA Airways to an investor group including Air France, KLM and Delta. Now, 3M plans to eliminate jobs as part of a broader cost-cutting drive in response to the slowing US economy. The scope of the cuts flagged in an internal memo is not yet clear. 3M has underperformed in recent years amid supply chain snags, currency fluctuations and also rising costs. And that's your Bloomberg Business Flash. Danny.
Leanne, thank you so much. Well, let's get more on the central bank story and focus in on Europe, where ECB officials are under pressure to act more aggressively to fight inflation. Hikes of 125 basis points by October being priced in, with at least one 75 bip hike now fully priced. Joining us now is Bloomberg's Lizzie Burden. I mean, Lizzie, these markets adjusting quickly. What's led to it?
Well, economists as well have changed their calls from 50 basis points to 75 basis points, and they did it in quick succession after that euro area inflation print yesterday, hitting an new all-time high at 9.1% in August. And of course, it's not just, it's broad-based, put it that way, which means that this inflation is likely to last. It came despite the fall in oil prices. But it's not just because of the raw data, it's also because of all this hawkish commentary that we've had out of the ECB at Jackson Hole and since. I think it's 6 governing council members now who've said that they want at least a discussion of more than a half-point hike. And you've heard the Fed as well being so hawkish. It's already done 2 75 basis point hikes, which is difficult for the governing council to ignore and not feel behind the curve. But in these economists' notes, they emphasise that it's a close call because, of course, we had Philip Lane, the chief economist, very influential, calling for a cautious approach, and that's largely because of the risk to Italy, given its exposure to higher borrowing costs.
Right. And Lizzie, I know you've had to do some fast reading because just minutes ago we had the BOE publishing that decision makers survey poll. Walk us through it. Was anything particularly interesting in there that especially might influence their decision making?
Yeah, so looking ahead, the CFOs of businesses of all different sizes are seeing inflation CPI to be 8.4% 1 year ahead, up from 7.3% in the July survey, and 4.2% in 3 years' time. So this is higher than the last reading, which already was considered to be above the level that's comfortable for the Bank of England to be reaching its inflation target. This print is important to the Monetary Policy Committee ahead of its September meeting because it shows how much inflation will be embedded. It's become an increasingly important indicator to the MPC. So it really does add to the case for a half-point hike from the BOE in September.
And talk to me about where we stand when it comes to the politics front on the UK. The front runner for the race, of course, ruling out tax increases last night.
Yeah, we heard from both the candidates at the London hustings yesterday, Liz Truss and Rishi Sunak. Liz Truss not only saying that she wants tax cuts, but also ruling out tax rises. And that's despite, if you remember, this Bloomberg scoop, which said that if the windfall tax were continued, continued, it would generate tens of billions of pounds of revenue to help with the cost of living crisis because of the excess profits of energy companies. Instead, Truss is saying that she wants tax cuts and a new one on the table. Bloomberg scoop yesterday saying that she would actually cut business rates, which have been so unpopular with businesses. It would kill two birds with one stone by allowing businesses more room to pay their energy bills this winter.
Okay, Lizzie, thank you so much for the update. That's our very own Lizzie Burden. Now coming up, Pernod Ricard CEO Alexandre Ricard on the results at the French drinks maker. We'll have that interview for you next. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, French distiller Pernod Ricard has reported full-year revenue that was at a record as consumers drank more scotch coming out of the pandemic. The makers of alcohols, including Absolute Vodka, also signaled further price hikes in the U.S. and other key markets. Well, we're joined now by Pernod Ricard CEO Alexandre Ricard. Alexandre, thank you so much for joining us this morning. I mean, look, huge numbers here. Another full year of a record, especially significant considering that in places like Europe, in Asia, and even in the U.S. to some extent, we're heading into a cycle of a downturn. Given the results you've seen, how sustainable is the level of consumer spending if we are going into a more sustained downturn?
Listen, what we're seeing so far, and this is a post-COVID human behavior, which is amazing, there is definitely a newfound appreciation for conviviality, for celebration, for togetherness, and I'm sure you've witnessed it over summer on terraces that were full, hotels that were operating as well, quite full, tourism, vacation. So far, so good, and we've had really record results with our net sales growing by 21%. We hadn't seen this in over 30 years. and our profits growing by 25%. And this is really broad-based. I mean, coming from all regions, America's up double-digit, 12%, Asia, rest of the world up 19%, and Europe as well, up 19%.
So that's the demand side. It's clearly there. But what about the supply side of things? What is the most difficult for you to source now, whether it be materials, whether it be labor, or just the cost of keeping the lights on?
No, there's no doubt that supply chain has been disrupted. It has somewhat improved a little bit, but it's still being disrupted. That's number one. Number two, obviously, and that's no news for anyone right now, but there's inflation. We have increased our prices basically everywhere, on average, mid-single digit, and you should expect us to continue to increase prices as we enter in our new fiscal year to offset, of course, inflation.
Do you think that'll still be in the mid-single digit figures, the price increases going forward?
Yeah, that's basically a broad average. It will vary from one market to another. It will vary from one brand to another. But clearly, our price increase strategy is designed to offset inflation, of course. And we're investing behind our brands and brand equity to make sure that demand stays there for the brands.
Are there any other levers which you're able to push besides pushing along prices? For example, are you looking at cost cuts, anything of that regard, slowing hiring as well to help keep some of those measures and keep margins in line?
No, it's a great question. There are absolutely many levels that we can activate and that we do activate. Obviously, the first and foremost one is pricing, but then you also have promotional intensity, promotional depth, promotional frequency. Then you also have your mix. You have your innovation strategy, where you push new innovations at higher price points that are more margin accretive, and then you have costs. And on the cost side, we have a number of operational efficiency initiatives to protect as well our margin.
Alexandra, one thing that really struck me as fascinating in this reporting season, we heard from Fever Tree saying that they're having a difficult time sourcing glass, among other things. Obviously, glass, a very important thing for your business. How acute are those pressures? Are we going to see a situation where you have to look beyond the usual materials you're using?
Well, listen, as I mentioned, supply chain is somewhat disrupted. Now we're a big glass purchaser. What we are seeing on the glass front is obviously a lot of inflation, which we're covering through the initiatives I mentioned earlier. And we foresee these disruptions to continue at least for the foreseeable future, i.e. the coming months, of course.
What about when it comes to your sales outlook in Asia? We just learned this morning, at least morning European time, that a new city in China was locking down of 21 million people. The reopening story, it seems still far away for Asia. What does that mean for your outlook?
Listen, what it does mean is continued disruption of the trade with goes and no-goes, with stop and goes, like we've witnessed over the last 12 months. So far as we're moving into Mid-Autumn Festival period, and Mid-Autumn Festival is next week, the trade is quite confident, and so our sell-in numbers are quite strong. And we'll see how the sellout takes place in the coming weeks. But so far, so good. What we've seen is easing of restrictions starting the month of June, and our growth has resumed in June after 2 difficult months because of increased restrictions. So we'll see how things go, but there's stop and go, and what's interesting to see is that as soon as the trade reopens, people enjoy going back out again.
Certainly true. We've seen that, as you said, the conviviality still alive and well in post-lockdown in other regions. I do just want to end it on the energy concerns in Europe. If we're going into a period where costs are going to continue to rise, perhaps demand rationing when it comes to industry, are you doing anything, or have you been hedging energy costs?
Yeah, maybe two things on that front. First of all, from a more long-term strategic perspective, we have a clear sustainability and responsibility strategic roadmap where energy saving, energy efficiency is core to that roadmap. So these are initiatives we already started work on a number of years ago, with renewable energy being first and foremost. And second, the more short-term issues, and as a European company and a citizen of Europe, we're obviously going to do our bit in terms of savings over the winter, which is perfectly fine with us.
All right, Alexandra, thank you so much for joining us this morning. Alexandra Ricard, CEO of Pernod Ricard, thanks so much. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst
is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
My current view is that it will be necessary to move the Fed funds rate up to somewhat above 4% by early next year and hold it there. I do not anticipate the Fed cutting the Fed funds rate target next year.
The Fed's Loretta Mester there on the need for higher rates. And that continued hawkish endorsement of Jay Powell's message is something that has continued to weigh on risk assets and send yields higher. Now, two-year yields may be taking a bit of a pause from the extremes of the upward march we've seen, still at the highest since 2007. Stocks, likewise, are falling this morning, too. Bears doubling down. Jeremy Grantham says the super bubble has yet to burst. All of that means everyone's flocking to the dollar dollar. We're also nearing 140 on yen. We are, though, seeing nat gas continue to tumble for a fourth day. It's now down about 33% from the peak of what we saw. Yes, there's more stockpiling. Demand for fuel has also slumped 12% on the year in August, according to Citi. Von der Leyen is also set to outline a plan for power in her September 14th speech. Well, Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
VK ฟิล์มติดบ้านกันร้อนสูงราคาถูกช่วยประหยัดค่าไฟแอร์อย่างเห็นได้
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
There's a lot of different potential outcomes as we head into the fall.
I think there are huge disparities still out there.
Overall, we're still neutral on equities.
I wouldn't be surprised if equity markets go down a bit further from here.
Everybody's really trading on all these different data points, so we expect a lot of volatility ahead in equity markets.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. China ramps up COVID zero. 21 million people in the city of Chengdu will be locked down in a fight to contain a coronavirus outbreak. Warnings of a super bubble in the stock market that has yet to burst. Famed investor Jeremy Grantham says overvalued equities, bonds and housing will collide with high rates and inflation. And British households brace themselves. A new report says they're in for the biggest squeeze on living standards in a century. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Matt Miller and Kriti Gupta in New York. Anna Edwards and Kaylee Lyons are off today. Kriti then working through these comments around a market bubble and the direction for the S&P.
You know what's interesting, Tom, is at the end of the day, it really does come down to the COVID story, at least in the Asian session. The idea that a lot of this risk-off sentiment that you're seeing comes from that COVID lockdown. Of course, in China, think about it, another megacity being shut down, which also, by the way, will have implications for those supply chain issues. Once again, a little bit of a deja vu situation. You can see how that's impacting Asian assets. No surprise here, down 1.9% across the region. If you actually zoom in to the Nikkei specifically, down 1.5%. So once again, that tech-centric focus getting hit. Does that really continue on into the U.S. session is going to be the question. And as, of course, you see that China lockdown situation, of course, you're going to see a little bit of a correlation with copper prices also taking it on the chin, down to the tune of about 2%. I have to say, though, once again, I've been saying this all week, the currency story is the one that's catching my eye here. All week. All week.
Saying it all year.
All year, but a little extra this week. And this currency story is crucial, at least this time around, with the Japanese yen hitting new weakness, now the weakest going all the way back to 1998, a 24-year low. And I guess the question, Matt, is how low can it go?
Yeah, and for the record, I do not disagree with you. Obviously, the currency story is massive. The dollar is approaching a record high. Valerie Sarasuelo in London points out that the intraday level to beat is 1304. Right now, the Bloomberg dollar index at 1297 and climbing, so we're getting close to that level once again. You can see S&P futures are down. It's not just the Asia lockdowns, though that didn't help. It's the NVIDIA news about new export rules to China that really hit that stock and the entire tech sector hard after hours yesterday that are going to hurt the market as we open today. Take a look at crude right now, down below $90 for Texas Intermediate, 87.68, as really the market grapples with the idea of slower growth. Yes, supply may be tight. There's not a lot of spare capacity in OPEC or in the U.S. For that matter, but demand is going to be even worse. Bitcoin right now down under 20,000 as well at 19,932, moving obviously with risk assets and on concern of continued higher rates after what we heard from Loretta Mester yesterday. Tom, what's Europe look like this morning?
Yeah, Matt, and just on our oil story, for the context, Chengdu, population 21 million, so almost the same population of Australia, the same population as the Netherlands being locked down. Again, to that impact in terms of the demand. Here across Europe, you're heading for 5 straight days of losses, some pretty heavy selling across the benchmark. You see in here in the UK down 1.4%, over in France down 1.5%, and losses in Germany of 1.4%. Let's switch it on, see how things then are playing out across these indexes. And you talk about the currencies. I want to match your yen with sterling, Kriti. I up you, because sterling down 5.5% in the month of August. That is the worst month since Brexit. And despite the fact that yields at the front end in terms of gilts, 2-year yields, up around 130 basis points for the month, the biggest jump you've seen in yields since about 1992. Despite that, the pound still being pummeled. And we're looking at that again today. 116 on the pound, a loss of 0.1%, and yields 308 now. That is a jump in terms of yields, up 6 basis points. The sell-off continues. Again, across the benchmark, losses of 1.5%. And one corporate story to bring to your attention. This is Reckitt Benckiser, a surprise in terms of the CEO stepping down after pretty successfully restructuring this business. They now have an interim CEO. The market's not liking that, down a little over 4%. Kriti.
Certainly a lot to digest. Really interesting on the macro and the micro front, especially as all eyes on payrolls this week. Let's take a look at what's ahead today. U.S. economic releases include manufacturing and auto sales data for August. You also have Raphael Bostic of the Atlanta Fed due to speak. And President Biden set to deliver a primetime address in Philadelphia on what the White House calls, quote, the continued battle for the soul of the nation, Matt.
All right, so we'll follow all of that very closely. But the big news, as you pointed out at the top, in markets is China. The city of Chengdu is locking down its 21 million residents. It's a huge move, obviously, in the vast western region of the country that had so far been largely untouched by the coronavirus pandemic. John Liu, Bloomberg's executive editor for Greater China, joins us now from Beijing. So they are sticking with COVID zero and telling people you can't leave the house unless you want to go get groceries once a day.
That's right, Matt. 21 million people, as you said, locked down indefinitely. We do not have an end date for that lockdown. I think that is what people are watching. It could go one of two ways. It could go something like Shanghai, which was locked down for 2 months. We've had other cities who've locked down for a few days and then come out of that lockdown. And so really looking forward to whether or not this action by the authorities there in Chengdu stops the outbreak there. If it does, then maybe this is short-lived and a blip. If it doesn't, it could cause real pronounced pain for the economy.
And John, on the geopolitics, we're hearing that Taiwan and Taiwanese military have shot down a drone that apparently came over from the mainland, from China, across to one of the islands that is, of course, controlled by Taiwan. How dangerous is this moment? What do you read into this? And have we heard anything from officials in Beijing in response?
So for the last couple of days, there have been civilian drones being flown from the mainland over to some of the outlying islands under Taiwan's control. These islands are very close to the mainland, so well within the range of a civilian drone. Obviously, this is less severe than if it was a military aircraft of some sort that was shot down, but still it speaks to how tense the situation is, how on edge everybody is about any interaction between the two sides at this moment.
John, thanks very much. John Liu is Bloomberg's managing editor for Greater China out of Beijing. I just want to point out we're getting headlines across from Hong Kong as well that officials there are targeting the end to the hotel quarantine rules in November. So still 2 months from now, and it's only a target, but that news at least goes in the other direction. Now let's get to a big warning from a big bear. Investor Jeremy Grantham says the stock's super bubble that he warned about previously has yet to pop. The GMO co-founder sees more trouble ahead due to what he calls a dangerous mix of overvalued equities, bonds, and housing. Bloomberg's Danny Berger joins us now. So Danny, it's not surprising that Jeremy Grantham is bearish, but people always find it very interesting.
Yeah, I mean, look, definitely a perma bear. It does feel like in this current environment, Matt, though, the bears are the loudest in the room, if not the most plentiful. I have to read a portion of what he said because it's almost Shakespearean. He said, prepare for an epic finale. If history repeats, the play will once again be a tragedy. We must hope this time for a minor one. So a lot of drama injected in here. But I think the most interesting thing, or among the most interesting thing about Grantham's call that a super bubble hasn't deflated yet, is that it's not necessarily about the Fed. Look, we've seen equity markets have this major reprice as that Powell pivot gets priced out. But it's not interest rates that Graham is worried about. It is earnings. It is multiple compression. It is margins taking a hit. That is something that perhaps the market has yet to grapple with. So his original call was down 50% from the peak. At the worst of the June lows, we got to about 25%. It's not just him. It's Mike Wilson from Morgan Stanley. And Matt, he's a perma bear too. That's also worth pointing out. But he also thinks we're going to retest those June lows. And he also says it's because of earnings. So right now we're trying to digest the Fed. Has the second shoe dropped? EPS, forward EPS has dropped by about 2.5% from the peak, Tom, which does suggest that if margins are going to deteriorate, there's some pricing in left to do there.
OK, the drama in the markets being articulated by Jeremy Grantham. As you say, Danny Berger, thank you very much indeed. Plenty of drama here in the UK as well as we weigh up the cost of living crisis that just gets worse, it seems, on a daily basis. A new report saying the UK households are set for the biggest squeeze on living standards in a century. The Resolution Foundation warned of a 10% fall in real disposable incomes over 2 years, unless there is a support package of tens of billions of pounds. Joining us now for more is Bloomberg's Lizzie Burden. Lizzie, at this Resolution Foundation report, it is dire, to say the least.
Dire, to say the least, and it underscores the challenge that awaits whoever is the next Prime Minister. The Resolution Foundation says that 3 million people more are going to be in absolute poverty because of this. Households are going to be £1,000 less well off. And that's despite the £30 billion worth of support that we've already had from the government since March. So we had the chief economist of the Resolution Foundation, Mike Brewer, on Bloomberg Radio earlier. He called for this extra support from the government, but of course we know that the front runner to be the next Prime Minister, Liz Truss, is against what she calls handouts. So we also had, remember, the former Deputy BOE Governor Charlie Bean on Bloomberg TV saying that the tax cuts Liz Truss wants aren't targeted enough at the needy. So yes, it's a very dire situation if you're one of the poorest households in Britain who's most exposed to this cost of living crisis.
I thought also the Charlie Bean interview was absolutely brilliant. Highly recommend people go back and look at it. Listen, everyone's talking about Liz Truss as if she is the new PM. Give us an update for those of us who don't live in Great Britain. What's the deal? What's the schedule? When do we know for certain?
All the polls are saying that it's likely to be Liz Truss. We're going to find out on Monday. I'll be at Downing Street with all the news. But we had more hustings in London yesterday, and Liz Truss not only said that she would do tax cuts, but she ruled out tax rises. And that's despite this Bloomberg scoop, which revealed Treasury analysis showing that if the windfall tax were continued, it would generate tens of billions of pounds that could help people with their energy bills because of all these excess profits from the energy companies. But Truss has ruled that out, and we have another Bloomberg scoop, in fact, which says that she would cut business rates, and that would kill two birds with one stone because, of course, businesses here have been so against these commercial property taxes, but it would also help them with their energy bills.
Bloomberg's Lizzie Murden on all things Europe and specifically the UK. It's a lot to digest. Well, speaking of all things going on across the Atlantic, we do have some breaking news here. A headline coming from Lufthansa here saying that they are going to cancel almost all Frankfurt and Munich flights that coming on Friday. So once again, you are starting to see a lot of that energy crunch, that travel crunch specifically hitting those flights. We'll bring you more updates.
Keep in mind, I'm sorry to interrupt. Keep in mind, Kriti, how important this is as a hub, because Lufthansa is one of the biggest European airlines, and almost all of its flights go through Frankfurt, one of the biggest airports in Europe. So it's huge news for the business community and for vacation travelers.
I was going to say for vacation travelers, it feels like everyone is in Europe right now. And of course, as you mentioned, well, really flying through that hub. We, of course, will bring you all the updates there. In the meantime, let's bring it back to Washington here. Bloomberg sources say federal prosecutors are likely to wait until after the November midterm elections to announce any charges against Donald Trump. This comes after the U.S. Justice Department said White House records held in a storage room at the former president's Florida home may have been concealed or removed before a June FBI search. Jack Fitzpatrick, our resident Bloomberg government reporter, has the latest from Washington. Jack, walk us through it.
Yeah, so the news today, according to people familiar with the process, is that the Justice Department knows they're not going to announce charges if they get to that point before the midterm elections in November. They have guidance, a policy that they have inconsistently followed in recent years, that they're not supposed to take that kind of step and reveal information about the investigations that are being opened, charges that are being brought that are politically sensitive within 60 days before an election.
Like Comey Clinton.
Yes, Comey Clinton, and also the announcement by Bill Barr leading up to 2020 that they may open high-profile voter fraud investigations leading up to the election. That's the kind of thing that's not really supposed to happen within 60 days. 60 days before the election is just September 10th. They're obviously not going to finish this by then, and they actually may not get to the point of deciding who to charge or what charges they might want to bring by November, but at least for now, they're making clear that the end road of this and the big question of whether the former president would be charged with crimes is not something that's going to be answered before the election. And part of that is a policy that's meant to avoid having a huge effect on the election itself.
Hey, Jack, a Democrat won a special election in Alaska to replace their single representative, and that sets up a fight with Sarah Palin, right?
It was round one of the fight with Sarah Palin. There's going to be a rematch because Don Young, the longtime representative, died earlier this year. They had a special election that took a while to schedule, so they're running again in November. But for now, Democrats have one more seat, a little more breathing room for upcoming votes on things like to fund the government and that kind of thing. But it's a notable victory for a Democrat, not just because a Democrat won in Alaska, but one, this was somebody who campaigned campaigned pretty specifically and aggressively pushing back on the Supreme Court decision to strike down Roe v. Wade. And also, this is ranked choice voting. They just installed that new system in Alaska. Sarah Palin, obviously a very high-profile Republican with a following. She was one of two Republicans. Nick Begich, the other Republican, only about half of his supporters gave their second choice to Palin. The rest either supported the Democrat or did not choose to use it. So it's an interesting case study in how this newer system that's being put in place in some states plays out, and in this case helped Democrats in an unlikely state like Alaska.
Jack Fitzpatrick of Bloomberg Government, we thank you as always, waking up early this morning to give us all things Washington. Let's take a quick look at some of the stocks moving in pre-market trading in the United States. I want to start with NVIDIA, the big heavyweight here, the chip heavyweight, I might add, declining on a warning that a Chinese restriction, or I say a restriction to China, essentially the law governing the exports of artificial intelligence to China, well, that's going to be limited. Well, now NVIDIA is saying, well, it's going to hurt sales. It's going to hurt their bottom line in a massive way. So you can see that news actually dropping on the shares about 5%. The question is, what will the translation be to the broader S&P 500? Once again, I mentioned it is a massive heavyweight in the S&P 500, so we are, of course, going to keep an eye on that, as well as the ripple effect throughout all the chip stocks here. Broadcom, remember, is reporting after the bell, so there is a massive chip story to be had. We, of course, will keep you apprised of it throughout the day on Bloomberg Television. My second mover this morning is going to be 3M. We've been talking about the job cuts all week, this story for Snapchat. We've also talked about it in big tech. We've got payrolls tomorrow. Well, now it's hitting the industrials as well. 3M planning to eliminate jobs in a broader cost-cutting push. Right now, it seems like the stock is unmoved. It was moving earlier in the session, so certainly a name to keep your eye on. And lastly, we'll go back to the retail favorite, Bed Bath & Beyond, unveiling a turnaround plan that envisions new financing, sweeping store closings, and the sale of as many as 12 million shares of stock. On the news yesterday, of course, the stock dropping some 27% in the session. This morning, the hangover continues down about 5%, Tom.
Okay, the Bed Bath & Beyond story is the story that keeps on giving, isn't it, across these markets? Thank you very much indeed. Coming up, we're going to talk further about how to position across these markets as we weigh up these calls around bubble risks and further downside. Esty Dweck, Flowbank CIO, is with us. And Russia's 24-hour English language news channel. It may be banned in the US. It's already been banned in the EU, at least parts of the EU, the UK as well. But it's turning its focus to a new audience. Read more of today's Big Take story on Bloomberg.com or by typing in NI Big Take into your terminal. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kriti Gupta in New York and Tom McKenzie in London. We are simulcast on radio and television. Nonetheless, I'm going to show you a chart here that I think is important. I'm going to show those of you watching, those of you listening can imagine what it looks like. We see financing costs jumping, and that's illustrated on this chart just by 2-year yields rising. On the other hand, we see the pound dropping. In fact, I'm pretty sure it was one of the worst months in recent memory since Brexit, actually, for the UK pound versus the dollar for the cable rate. So that puts UK companies in a very difficult position. Joining us to talk about that is Irene Garcia Perez, Bloomberg distressed debt reporter. So Irene, how are we seeing this playing out? How are we seeing this play out?
So we see investors having a lot of question marks and doubts about what's to come for the UK economy. It's, of course, a gloomy outlook, but how bad inflation is going to get, what the Bank of England is going to do about it, and also, although they're pricing in an interest rate hike, of course, but it's also about what the next government is going to do to support the economy.
Irene, what is the read across, if there is a read across, or at least what is the situation in the US when it comes to those corporate debt, the stress, the pressure, as we readjust to this more hawkish Fed? Are we expecting to see a blowout in yields?
So it is higher for corporate borrowing. It is getting more expensive, but it's coming back to June levels, and it still has some room to go to 2020 COVID levels. So it's getting worse and it's getting more expensive, but not as bad as in Europe, in relative terms.
Yeah, and of course the UK has its own idiosyncrasies as well. Irene Garcia Perez, thank you very much indeed on what is happening across the corporate bond space. For more market analysis, check out MLive Go on your terminal. Plenty more coming up. Stay with us. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
With replays all weekend on Bloomberg Television and Radio.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Friday,
Why has Elon Musk said no to the car factory?
It's still in discussion. Let's see later the final result.
Do you think that by bringing people together, that is a way to solve conflict?
There must be communication, even if it doesn't necessarily resolve the problem. It is better to have dialogue than to have open conflict.
This is a conversation with President Jokowi of Indonesia.
Only on Bloomberg.
Now keeping you up to date with news from around the world, here is the first word. In California, blackouts have been averted so far in the midst of a heat wave that could threaten the supply of electricity through next Monday. The state called off its power grid emergency as night fell and it got cooler. The temps reached triple digits in much of the state yesterday. Russia is holding major military exercises with China and India. It's seen as Vladimir Putin's way of pushing back against attempts by the U.S. and its allies to isolate him and his move in the invasion of Ukraine. More than 50,000 troops, 140 aircraft, and 60 ships are taking part in the war games in Russia's Far East. And Lufthansa says it will cancel almost all flights to and from its Frankfurt and Munich hubs on Friday. That comes after the German Airlines Pilot Union called for a one-day strike. About 800 flights will be affected in total. Coming up, Esti Dweck, the CIO at Flowbank, joins us. This is Bloomberg.
What do you think is the future of the U.S. dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
ไมโครไฮยาลูรอนเล็กกว่า50เท่าซึมซาบล้ำลึกริ้วรอยดูลดเหลือ 60% L'Oreal Paris ไฮยาลูรอนเซรั่มราคาใหม่พร้อมแบบ2ลองเลยเพราะเราคู่ควร
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different, Digital Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China ramps up COVID zero. 21 million people in the city of Chengdu will be locked down in a fight to contain a coronavirus outbreak. Warnings of a super bubble in the stock market that is yet to burst. Famed investor Jeremy Grantham says overvalued equities, bonds and housing will collide with high rates and inflation. And British households brace themselves. A new report says they're in for the biggest squeeze on living standards in a century. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Matt Miller and Kriti Gupta in New York. Anna Edwards and Kaylee Lyons are off today. Matt, you're checking in on US markets. Here in Europe, the bloodletting continues.
Yeah, and I have to say the inflation warnings out of the UK are dire. I mean, the worst inflation, the worst crunch on living standards since the end of World War II will be World War I. Will be interesting to see how Liz Truss deals with it if she indeed gets that seat. Take a look at futures here. We're down really on the Chengdu lockdown. It's a huge amount of people. It's a huge drop in demand, especially if it's extended to any kind of length like we saw in Shanghai. And we're also looking at a high in the dollar, or getting closer to a high in the dollar. Actually, the intraday level is 13.04 spot 55, but we're pretty close at 12.98, 28, and you can really see that effect in the strength of the dollar, especially if we're talking about Europe, over the euro or over the pound. NYMEX crude coming down on concern about a drop in demand under $90 a barrel, way under now at 87.98, and Bitcoin also coming down as it is highly correlated with risk assets, in sympathy with risk assets at 19,894. Kriti, what do you see in terms of the pre-market movers? Because we got that big dire news from NVIDIA yesterday.
We did, and it's really having a major effect on the share price and probably the entire sector, and not to mention the entire benchmark. Of course, we know NVIDIA is that massive heavyweight. Declining on that warning, essentially that restriction that the U.S. government has put on the chip sector broadly, any artificial intelligence, the exports to China, well, there are going to be some limitations on this. NVIDIA is saying it's going to hurt their bottom line. So those shares down to the tune of about 5.6% this morning. And the job losses, Matt, they continue to the industrial sector. We've talked about it in Snap. We've talked about it in Silicon Valley and big tech. Well, now 3M planning to eliminate jobs in a broader cost-cutting push. This is something that's going to start picking up steam as we go throughout the week. Right now, it's not weighing on shares, but it was moving them earlier in the session, so we are going to keep an eye on those names. And lastly, a retail favorite, Bed Bath & Beyond, Tom, unveiling a turnaround plan that envisions new financing, sweeping store closings, and get this, the sale of as many as 12 million shares of the stock. We know liquidity has been a major issue, and apparently those stock sales are the way to address them. Those shares down 5.4%.
I just love how even globally we zero in on this stock, Bed Bath & Beyond, a stock that, frankly, outside of the US, probably most of us had never heard of up until about 12 months ago or so.
Haven't you seen Old School?
No, I've missed out on Old School.
Tom clearly doesn't go towel shopping.
I highly recommend watching it. They may have to go to Bed Bath & Beyond. It could be a pretty busy Saturday.
Here in Europe, markets continue setting themselves up for 5 straight days of losses now. 1.6% across the benchmark is the loss that you're looking at. Yes, I have a bit of a UK bias today because the pound, again, is being hit. Of course, Matt was talking about the strength of the US dollar. That, of course, is a factor. And then you have the idiosyncratic pressures within the UK as well. 115 below 116, a loss of 0.2% in the session today. That is despite the fact that gilts continue to rise higher, up 5 basis points in the session. The sell-off in terms of the front end, particularly here in the UK, pronounced. 130 basis points. That was a move higher in yields just a month of August alone, the biggest jump you've seen since 1992. And a loss, by the way, in the pound of 5.5% in August, the biggest drop since Brexit. One corporate story to bring to your attention is Reckitt Benckiser. So it's a maker of consumer goods here in the UK. Down 4.5%, the CEO leaving unexpectedly. An interim executive taking over for the moment. Investors not liking the news. Down almost 4.5%. Matt.
And some big names there as well for US consumers. They make Calgon, they make Lysol, right? They make Durex, they make Clearasil. I mean, it's a huge company that a lot of Americans have not heard of. So good to keep an eye on that. Joining us now is SD Dweck, Flowbank CIO, to talk about what we can expect really on both sides of the Atlantic. SD, obviously inflation is huge here. And you know, I had a bet with Kriti that headline CPI had peaked in the U.S., and I think I've won that bet. But what does it look like in Europe?
Well, I would agree with you on the U.S. front, but I would also agree with you that for Europe and the U.K., we are not there yet. We saw European inflation come in hot yesterday. It doesn't seem like it's the peak when you look at what electricity and gas prices have been doing. We had a couple of good days earlier in the week because German storage levels were better than expected, but we're not even, close to winter yet, and those prices are still going up. So a big, big challenge for Europe. And not much better, actually, probably even worse for the UK.
So, Esty, the reason that Matt won the bet was he said that it was really all commodities driven. And then as you saw some of the commodity prices come down, that was what was basically the main driver of inflation. My argument was it was rent, it was the other cost of living pressures. And then he said he wanted to go to Dairy Queen to collect on the bet. Now he's on a diet, and now he can't collect. So I really think I came out the winner here. But Esty, let's go to that point of what's actually driving the story. Because, of course, we know commodities has been in the driver's seat. But I'm curious about the other costs here, the rent, the food costs, for example. Your take?
So you certainly have the goods inflation coming down, and the commodity aspect was huge at the beginning of the year, and that helps. Rent, I think, will probably come down, but slower and maybe not as soon as some of these other prices. And the services area does tend to be a little stickier, so we have to keep an eye on that. But at the start of the show, you were talking about some of these job cuts that we're going to see, a bit less investment. We'll see what the non-farm payrolls come out as tomorrow, but it does feel that you have a number of different disinflationary signals in the U.S. that are coming through, and that inflation will gradually come down, not just because of commodity prices. And we can't really say that for Europe.
Esty, how much of that then is informing this call from